What a wild ride it's been for GoPro as a public company. The stock peaked over $80 per share, only to crash back down to earth when the company made some really big mistakes from an inventory and product design perspective. But over the last few years, GoPro has been much more steady. The stock's about $5 a share. And I think there's starting to be some value in shares of GoPro. So I wanted to go through what the numbers look like and talk a little bit about what management is telling us about the future of GoPro, what to expect over the next few years. Before we get to that, I do want to thank the Motley Fool for sponsoring this show. They make the show possible, and they're handing out their top 10 stock picks to buy right now at fool.com/rive, fool.com/RIIV. It's at the bottom of the screen, and it will be in the show notes as well. It really helps out the show. So check that out for their top 10 stocks to buy right now. And don't forget to subscribe to Rive Investing as well. I appreciate it. Now on to GoPro. Now you can see here in this chart that GoPro is now only has a market cap of about $840 million, despite the fact that it has about $1.2 billion in revenue. So for a product company to be trading under their amount of sales, that's pretty solid from a valuation perspective. And then net income of $78 million over the last year. I'll get into what these numbers are. There's a lot of volatility in GoPro's results, but they are generating cash right now, and so that is a positive trend for them. And I think they do have a good view on what they're going to be in the future, not going to plan on growing too much, and that's why I'm a little bit bullish on them. So here I want to go through a few of the slides from GoPro's recent earnings release. And it really tells a lot about where GoPro is at from a strategic perspective. Now, one of the things I want to frame correctly here is that I don't think this is a high growth company, but this is a pretty solid product company. And if they can continue making products that people want to buy, there is a lot of value in their niche in the market. So as long as it's a solid strategy and investors are getting a good value, then it could be a good stock to own. You can see that before 2019, they were a hardware-only company. Retail accounted for over 90% of sales. Gross margins were in that 30 to 35% range. That's a number that I want you to keep in mind, is the 30 to 35% margin. They were very profitable at that point, or at least for a period of time as a public company. 2020, they continued to make a transition to a much more simple business structure and product structure. And then they added subscriptions to that as well. The subscriptions are typically both recurring revenue and then also very high margin. And then it gives you a little bit more of a direct tie to consumers, so that now you're starting to shift less of those sales from retail to more direct to consumers. So that's a positive trend for a company like GoPro. You can see that in the numbers here as well. 68% retail, 32% direct to consumer. So that's starting to improve, and not coincidentally, gross margins are improving at the same time. $91 million in cash generation. 2021, things continue to improve. Now we're up to 41% gross margin, $221 million in cash generation. Through Q3 2022, their numbers aren't quite as good, 38% gross margin or 42% on a constant currency basis. And the company's actually burned cash. But keep in mind that GoPro is very heavy in the holiday quarter. So the fourth quarter is going to be a very big quarter for GoPro. That's between the third and fourth quarter. That's when the company makes a vast majority of its sales. So that's really when the rubber hits the road. Expect the cash generation to be positive in Q4. But you can see right now, so far this year, the company has burned money. So executing on the strategy, I do think simplifying the number of products. Here's one of the reasons that the strategy is a little bit simpler and more easy to understand, not only for investors, but for consumers as well, is GoPro doesn't have a new product that they're releasing every year in every price category. They simply move their products down the price curve. So right now, here are the cameras that they have available. Hero Black 11, that's the newest camera, $499. Last year's camera is now $450. The year before is $350. And then they have the GoPro Max, which is the 360 camera. Not a big seller, so that's not a majority of the company's sales. But that really simplifies both the inventory and planning that GoPro can do. And that's really where they had problems in the 2016, 2017 range, is they built too much inventory and then didn't have products that people wanted to buy. So they had to write off that inventory. Using this kind of strategy, just adding one new product and then moving products down the price curve allows you to improve your inventory management. And that has been a big piece of the company's cash generation over the last couple of years. Let's look at a couple of financial metrics that I think are interesting for investors. Camera mix, this is the average sale price over $400. That has increased from about 40% in 2018 to nearly 90% so far in 2022. So they're able to push people up that price curve. The number of subscriptions are increasing as well. That started in the 2018 range, and now over 2 million people subscribe. They're actually offering discounts to subscribe to their ongoing services to buy a camera. So basically makes that product free or actually at a discount. So it's an interesting strategy, but it's clearly been very successful. And then you can see gross margin here improving from the mid to high 30s to over 40%. That's really where a company like GoPro needs to keep their margins to maintain profitability. The subscription business, here's some of the metrics to think about. 7% of total revenue, 2.1 million subscribers. And the GoPro.com, this is an interesting stat. Those are the direct-to-consumer purchases. 95% attach rate for GoPro or for their subscription plans. Only 35 to 40% for retail sales. So that's why they want to push a lot more of those sales to online sales as you get that subscription business, which is 70 to 80% gross profit and growing 48% year over year. So very solid business, not a majority of the business, but a very solid kind of bolt-on business to add to GoPro's hardware business. And why is the subscription compelling? Well, this is the slide that they showed here, $50 per year. You get $100 off a new GoPro camera. So now you have some more recurring sales from the hardware side because you have recurring sales on the software side, and then a number of other features, including the quick software as well. So basically keeps customers coming back to GoPro for new pieces of hardware, which is something that really keeps the business going. And the last couple of things I want to show are the company's improving profitability. Again, like I said, not really a growth company. On the left side here, you see trailing 12-month revenue, pretty steady, but they have increased net income. And the net income margin there of around 15% is pretty solid. Remember, coming down a little bit over the last quarter or so. But if that can get back to where it's been historically, that will be a really good sign. And the final thing I wanted to show here is cash flow. This is really where the rubber hits the road for a company like GoPro. You're making hardware, you're making a software bolt-on, but you need to be able to generate cash flow, generate strong return on invested capital. Basically show investors that there's a reason to own the stock, and this is a great reason right here. The company now has plenty of cash on the balance sheet, actually approved a $100 million stock buyback, $68 million of which is remaining. So think about that as another return of cash to shareholders. GoPro is really, I think, an interesting business and a really interesting value right now. This isn't a growth company, but is now a solid cash generating company with a really good balance sheet. With the right frame of mind and the right expectations, I think this is the kind of investment that can be really profitable long term. I haven't added this to my portfolio yet, but it is one that is on my short list. What do you think about GoPro right now? Did anything I showed you change your mind about the company? Leave your comments in the comment section below. Give this video a like, and of course, subscribe to Rive Investing. I'll be back with more investing ideas and insights for you in the future. Thank you for watching, and I will see you here next time.